Did you know that MicroStrategy has $3 billion of Bitcoin? And I'm sure you've heard that Tesla bought $1.5 billion of Bitcoin. But US GAAP doesn't currently address cryptocurrency. So how do these companies account for it? Here's what we know. Cryptocurrencies are not considered cash or cash equivalents. And that's because they're a poor store of value, they're too volatile, they're not widely accepted as a medium of exchange, and they're not backed by sovereign governments. Cryptocurrencies aren't considered inventory either. They're usually acquired for purposes of speculation. But even if you purchased or mined cryptocurrency with the intention of selling it through the ordinary course of your business, it still doesn't count as inventory because it does not meet the definition of inventory per US GAAP because it's not considered tangible personal property. So what is cryptocurrency? It's an indefinite-lived intangible asset accounted for under ASC 350. Cryptocurrency is recorded on the balance sheet at cost, whatever you paid for it. Now, cryptocurrency is not amortized, but it is tested for impairment at least annually and probably more frequently due to its volatile nature. The impairment is calculated as the difference between the carrying value on the balance sheet and the fair value of the cryptocurrency. Here's an example from MicroStrategy's 10Q. You can see that they account for their Bitcoin at cost minus any impairments and that it's treated as an indefinite-lived intangible asset. But there's a problem here, and it's why the Wall Street Journal said that Bitcoin and other cryptocurrencies could create headaches for the companies that hold them. That's because these companies are required to write down the cryptocurrency when there are losses through an impairment, but they don't write them up if their value increases. Let's say a company pays $2 billion to acquire some Bitcoin. The Bitcoin would initially be on the company's balance sheet at its cost, $2 billion. Now, if the fair value of that Bitcoin were to fall, and now it's only worth $1.5 billion, that company would have to take a $500 million impairment. But if the value of the Bitcoin were to increase, there would be no effect on the company's P&L statement. It doesn't record a gain. Doesn't matter how high the Bitcoin gets in value. The Bitcoin could go to a fair value of $8 billion, and it would have no effect on the company's income statement unless the company sells the Bitcoin. Then at that point, the company would have a realized gain that would affect its earnings. There's one exception to all this. In some cases, you might have an investment company that is able to account for cryptocurrency as an investment and use fair value accounting. In that case, both unrealized losses and unrealized gains would affect the company's earnings. That's all we know for now. There's not a lot of information about how to account for cryptocurrencies. Hopefully the FASB will provide some guidance going forward.